Good morning, good afternoon, and good evening to all. Welcome to our podcast, FinTech and SupTech, How to Leap Forward. My name is Salvador Chang, Program Director of the Toronto Centre, and this webcast is an invitation from the Toronto Centre FinTech, RegTech, SupTech Community of Practice, TCFRS COP. TCFRS COP is a community with the objective to exchange knowledge and collaborate on identifying the priorities, gaps, and solutions from the discussion of countries' approaches and practices. Members are policy decision makers and officials who have regulatory or supervisory functions related to FinTech, including payments, e-money, digital credit, digital insurance, crowdfunding, data and market infrastructure, and work in the implementation of innovation frameworks. If you are one of them, please write to my email so we can include you as a member. So today we have a webcast, and we have a webcast rule because we have such a big participation that we would like to set some rules for a smooth development of this webcast. Please write your questions using the chat option that you have in Zoom. Your microphones will remain mute, and we will address all the questions at the end. This session will be recorded and made available for download. So the topic of today is FinTech and SupTech, how to leap forward. The digital transformation of the global economy and the financial sector is accelerating. Some might argue, however, that financial authorities are, in most cases, ill-equipped to oversee the digital economy and its increasing complex financial sectors. The question is, aren't they or not? What are some countries doing already? How can others catch up and leap forward? How can they advance their financial inclusion objectives while preserving the stability and integrity of the market, as well as preserving and protecting, the consumer? To have this conversation, today we have as a guest, Simone di Castri. Simone is a managing director of the RegTech for Regulators Accelerator, an initiative that partners with global standard-setting bodies, leading financial sector authorities, and tech vendors across the globe. The objective is to unlock the potential of new technologies and data science to re-engineer market supervision, regulation, and policy analysis. Simone has 15 years of impact engagement in the fields of banking, telecom, and technology, and he has undertaken engagements with various organizations such as Bill and Melinda Gates Foundation, the Omidyar Network, USAID, the Better Than Cash Alliance, Facebook, World Bank, FinTech startups, central banks, and finance ministers. His current focus is on the development of innovative and inclusive digital and financial ecosystems, digital citizenship, open data, and RegTech, SupTech solution. Simone has published a number of reports on this topic, the last one to present the data stack, the blueprint for an end-to-end data interoperable data architecture that generates actionable insights for multiple personas, policymakers, and innovators. He also serves as a member of the Center for Financial Inclusion Advisory Council and the Tufts University Fletcher School Leadership Program for Financial Inclusion Advisory Council. Simone, welcome.
Thank you so much, Salvador. Good morning. Thank you for having me, and thanks to everyone for joining us for this conversation.
So to start with this conversation, I would like to ask you a question that relates to the current context in which we are. We are in the middle of the pandemic, and I would like to hear your reflections about the lessons that COVID-19 outbreak is leaving in terms of the need for a robust digital financial infrastructure.
Thank you, Salvador. This is a very good question. I think it's early to have a definitive answer. We will see things changing. My impression right now is that there is definitely a ongoing digitalization of the transaction, and therefore increasing datification of the financial sector. More and more data are produced by consumers that are buying online or using means of payments that are different from cash. There is more of a challenge. So more digital data on one side is a very good opportunity, because this is if the infrastructure serves the scope, creating an infrastructure that can really capture this data. These data are reliable, they're very granular. On the other side, from the supervisory perspective, I think we see, and we will see more difficulties in running the business as usual in terms of using on-site inspections, for example, as much as they've been used in the past. With physical distancing, the role of the supervisor also changed, so off-site supervision become more and more important, and the need for the supervisory authority to be able to do their evaluation, their assessments, staying within the premises of the central bank, if that is possible, because even that it's not necessarily available to the supervisors. In the case where there is a stay-at-home order, for example, supervisor cannot even enter the premises of the central bank, of the financial authority. In case things, I think, become quite complicated, because for what I've seen running diagnostics in several countries in the last 4 years on SupTech, it is a challenge for supervisors to be able to access the data centers and the data sets where they are outside of the premises of the central bank, outside of the building. Even when they're doing the on-site inspections, they often need to go back to the central bank if some data are missing, are wrong. So accessing, it's important to create for them the software, the opportunity to access in a secure way the data from remotely. It's important for them to have even the devices in order to run their calculations, their algorithms, which are quite complex. If we think, for example, about AML supervision, doing all the crunching all those data on a small laptop, on a small screen, it's our work. And this is quite basic, but it's important if we think really of equipping the supervisors with everything they need. So there are some new challenges. There is definitely the need to run more resilience tests for the financial sector. So pretty complex tests that needs to be run. They need to have good data for that, to make sure that as the economy is finding some challenges, the contagion to the financial sector is mitigated in terms of risk, or managed when the risks actually materialize. So, and there will be, so I think, like for everything else, the pandemic does bring some challenges and the need for some changes. All we say that goes into the direction of the need for more digital supervision, the need to rethink really in a more contemporary way the way supervision is conducted by the financial authorities, and also rethink the needs of the market. Young tech startups, or young fintechs, like all the smaller companies right now around the world, have the challenge of facing this pandemic more than the bigger corporations. So how many small fintechs will be so resilient to go through these compared to the Amazon, the Alibabas, the Google, that actually are mostly growing their business, and their business include financial services. And we'll go into the details later. But there is even more of an imbalance in terms of means and in terms of opportunities, probably between the big techs and the smaller firms that are have been born in the last 5 years all over the world, from Kenya to Nigeria. In Asia, we see so many of these important products and very relevant that are being developed, but we need to support the smaller fintechs to be able to stay into this market.
Thank you, Simone. And as you mentioned, in the context of the pandemic, the fact or the objective to keep the highest levels of financial inclusion is probably one of the top priorities. In that context, in recent years, fintech revolution has propelled emerging countries in a long way in the way in which they have advanced their financial inclusive objectives with the development of digital financial infrastructure. We're talking about payments, mobile credit, mobile insurance, and so on. However, the question is that an adequate supervision of the market requires then managing and processing a vast volume and variety of data, and obviously a more continuous monitoring. How do you see these authorities changing the way in which they collect and analyze the data? What changes have you seen? Are central banks and supervisors really ready for this challenge?
Probably they're not ready yet. They're getting ready. And maybe I prepared a few slides to throw here and there during the conversation, just to have some visual support. So I can, if you don't mind, I will share a few things as I speak. So this, let me open the screen. Can you see what I'm projecting?
Yes.
So this is in a few months ago, last year, we did with our team at the RegTech for Regulators Accelerator. We were honored to collaborate once again with the Bank for International Settlements, and we did some research to understand really what is the state of FinTech, of SupTech right now. And the outcome of the collaboration was a paper published by the Bank for International Settlements called SupTech Generations, and a data set that is online in the website of the RegTech for Regulators Accelerator. And we surveyed all the deployments, all the experiments that the central banks are doing. And exactly with this goal to understand how much has been already deployed, how much is in a testing phase, and where are we with our advances? What are the areas that are usually covered by these experiments? And so as you can see from in the screen, the majority of the solutions are still in an experimental or development stage. There are a few that are completely already operational. Because, and you can see also even from the Google search, that Google searches for a term always gives us a little bit of an idea of how mature a conversation is, at least in the digital realm. So we see that it is increasing the interest for SupTech, and there is definitely more projects that have been started by the financial authorities around the world, but we're still at a very early stage. And we're at the very early stage. It's important to understand where we're starting from. We're starting from while the financial sector, the financial products have become really digital in the last few years. The public sector is definitely lagging behind. And most of the work in the financial authority is still analog. There is a lot of data that are sent via email or just submitted, files that are submitted through portals. Most of the format that has been used is Excel for collecting and submitting and collecting the data, and also for the analysis, which creates some pretty relevant implications in terms of the complexity of the analysis that can be done. Excel is not meant to be a tool for deep analysis and for financial supervision, clearly. And the analysis itself is limited also by the fact that not many banks and the quality of the data not many financial authorities are using the clouds, for example. And that's also something may change with COVID. I think there is more of an understanding and trust into the clouds. I've seen a few central banks around the world releasing their limitation to use clouds, which is positive. So there is a lot of testing going on, and I think we will see definitely an acceleration in terms of the deployment of the solutions themselves. But still, we haven't reached a tipping point yet where we can say this is already really a mature market. And I'm seeing this on the other side. I've been analyzing the products also coming from the industry. We also have a database for the vendors. And I'm involved in the selection of the firms for the Bank for International Settlement and G20 presidency global tech sprint. And perhaps before we close, I would like to say a few words about that. But I'm reviewing these applications from SupTech developers, and in the applications we also ask whether it's operational, experimental, or in development, their products. And most of the products are still experimental in development. So both the financial authorities and the supplier of these products have just started the journey, a journey that is very important because the accuracy, the depth, the granularity of the data that supervisors are using right now, it's can really be improved using digital supervision and digital channels to acquire this data, to collect this data, to validate the data. The validation of the data in central banks is a major problem. It's very time consuming. I see that several financial authorities take weeks or months to validate the data that they gather from the commercial banks. In some cases, they never get to validate the data of credit unions, popular banks, SACCOs, or all the other millions of financial service providers that actually are serving the rural areas, the low income, the people more at the bottom of the pyramid, where we should keep safe as we increase financial inclusion. The responsibility of the financial inclusion movement, it's not only to create a new bank account, but it's to create a bank account, to give the opportunity to people to access a bank account, a payment service that is useful, that you can really make a change in the way people are living their life, make them feel more safe and secure. We need to guarantee that those accounts are supervised adequately. And this is not the case right now around the world.
Thank you, Simone. Listening to you and reading your most recent paper, you have mentioned that one of the most worrying emerging challenges in this digital transformation is the emergence of a big data divide, as you call it. Could you explain that a little bit more so we understand what do you mean by that?
Sure, thank you for this question. I'll pull up another slide if you don't mind. I'm jumping around with my slides. Let's see, this one. Okay, so by big data divide, we say a little bit of what I mentioned, touched upon very quickly before. So the data is the new oil, as the economists say, it's the new gold. It's an important asset. It's an important asset for governments, for the financial authorities, for the providers, for the consumers. Everybody lives around intelligence, decision-making, and decisions are informed by this data. Now, what we see in the financial sector is that there is a real imbalance between the data-rich entities, market players, and these are some of the incumbent financial institutions, the big ones who have been able really to invest in data infrastructures, in data science, because it's not only in data scientists, it's not just a matter of having the technical rail, the technology rails for the data to run, but also to have the people who are able to really conduct deep analysis. Some of the fintechs that have been well capitalized received significant investments. And then the tech fins, so the Facebook, the Google, the Alibaba of the world. Those are better equipped right now, both in terms of the technical tools that they have and capabilities, the people who are in staff. And then we'll see a whole other group of what we could call the data poor. So financial consumers, for example, they barely receive the benefits of the data, the quantity and quality of data that they create. They don't receive in return much of intelligence in terms of how to manage their portfolio, how to manage their finances. There are a few products here and there, like Mint and others, but not really much of a return for all the data that they provide, they create. The supervisory authorities, as we said before, it's very, we can say it's pretty poor, the quality and the accuracy and the timeliness of the data that they are using right now compared to what is available. All the other fintech startups and and all the smaller and financial services providers, they are not the big banks. So one of my concerns, and that I share with my colleagues, is that the data rich will cannibalize the data poor at the level of market players and financial services providers. In one way or another, we will see a concentration of power in the hands of a few market players, which we believe this fact that competitions will be limited will also create some challenges in terms of innovation, because so many of these smaller fintech startups are very innovative. And in terms of financial inclusion, because so many of the smaller and under-resourced financial services providers are the ones who are in the last mile, are the ones, as we said before, low cost, close to the poorer people. They're not the fancy financial institutions where people of low income feel comfortable, even as a cultural matter, to go. So we need to make sure that the financial sector has a variety of financial institutions that can all compete, and that we can enrich enrich competition instead of limiting it. And we need to make sure that financial consumers can better understand, make their decisions about their investments, what products to use compared to others, there is a better price, a better cost, and the supervisory authorities also are able to do intelligent policymaking. So how do we rebalance this situation? That's why we came up with the last paper that we published 2 weeks ago, which is about the data stack. The data stack is a concept that we developed over the last 4 years, working in Philippines, in Mexico, in Egypt, in Nigeria, in Ghana and in other countries. So there was something that was recurrent. It was like, okay, even if we work on supervision, that's important. That's a very important piece, the supervisory and the SupTech. But then how can this contribute to create a more competitive and innovative ecosystem? And this is the vision that we have, and it's where a financial authority becomes the center of the financial data ecosystem in a country, because the financial authority has both the mandate to demand data to financial service providers, already has data from many providers, that data from payments, data regarding savings, regarding credit. So very important indicators to understand not only finance, but also the economy. And layering this data with the supply side data, with demand side data, with data that come from the Census Bureau, really creates a stack of data that become very rich for running analysis and understanding many different things that can be helpful for other public sector authorities, for the competition authorities, for the financial intelligence units, for the credit bureaus. but also for external stakeholders. So right now we see that there are some open data in the financial sector. The central bank publishes statistics, quarter, monthly. They do have some data by sets that are open in their portals, but right now it's pretty poor, the quality of the data that is provided, the level of visualization, and that's the case for many open data platforms. Open data has incredible benefits, and there's been a lot of research that has been done on that. But the quality of open data platform right now is pretty poor. And that's why we moved one step up, which is creating open data commons. And the open data commons means that there is much more curation in terms of the data that are shared, but also the creation of a platform that become available for market players to submit, to bring in their own data for analysis, for benchmarking. So if I am able to have a platform where let's put it very, like, we just had the best example of what good data can do. When the COVID-19 arrived, what we looked at was the statistics of China, the statistics of Korea, the statistics of Italy, and they all profiled a similar curve. And all the countries of the world at that point were able to raise some data and start benchmarking themselves, not to understand if they were going on the same trajectory, entering their data and seeing where they are. This could be done also at the level of the industry. That's how the GSMA State of the Industry report works, for example. That's the incentive they provide to the telecommunication companies and mobile money providers to share their data, because they see the big picture and then they alone really see where they are. And in the way they're able to understand how to better develop their business. So we've seen there is some very important intelligence that is possible to extract from that. If we think about financial inclusion, having a map that describes where payments are happening, what is the type of traffic in terms of payments, what is the traffic in terms of airtime, like people just phone data taken from the telecommunication authority. So we understand how much digital life, mobile life there is in an area, and how much has been translated into digital payments. And then we overlap those maps with the map of where the agents are. And then what we did, we brought in demand side survey that was asking people, why do you don't use digital financial services and mobile money? And many people were saying, oh, I didn't even know where it exists. But that's an area where actually there are many people with mobile phones, few digital transactions, and there are already agents. So that type of intelligence can allow a mobile money provider to say, maybe run a campaign. I'm making a very basic example, but maybe I should run a campaign to create more awareness about my services, to connect the agents with the population and say, look, they're there, even just billboards, instead of thinking of changing my products, which doing other type of corrections. So this is a very, very basic information that it's readily available, just combining data that are here and there and that have never been brought together. And in the open data commons, what we see is also the possibility for some of the smaller providers to monetize some of the data that they are. Once the data has been anonymized, the smaller provider could bring into the Open Data Commons platform, which should be trusted because it's built by, it's at least managed by the financial authorities, by the central bank. And in that way, monetize some of their assets, which is a way for them to be able to fund their business development, product development, and so forth and so on. So that's an intervention at the ecosystem level that we believe will be pretty important. And together with the vision we built, which is most important, like, it's not just a vision, it's also a blueprint. This is all feasible. And this type of architecture that you see on the screen serves both the supervisory need of the financial authorities, the policy-making needs of the financial authorities to be able to do risk-based supervision, to create proportional regulation, to create policies. Think about right now all the all the payments and transfers for welfare that the state is sending to citizens all around the world. Like many of these programs, for the value of billions of dollars, are still complete in cash, which it was already a problem before because people need to travel, need to have the money on their own, on their body. So with the risk for being robbed, inefficiencies because the government really doesn't understand how many people have been receiving for real the money, how the people use the money. So there was already several projects to start digitizing some programs the way it happened with a very incredible impact in India with some massive products and in other countries in the world. Now, with the pandemic, there is even more need to guarantee the money gets to the family, arrives to the business with the amount that the government has promised and timely. So those programs needs to be digitized. But the digitization is possible only if there is this layer of intelligence available to the governments. And as we were saying, then with opening the data commons, it becomes also an intervention at the industry level and for the consumers, having more data available and in a digestible way. That's a very important thing. In my team, there are technologists who are absolutely passionate about data visualization, how to build smart dashboards. We run tech sprints with the different players to understand what type of graphics are more understandable, what type of even colors, so that the information is immediately available. And it's not possible any longer to open data just giving massive Excel files of data to analyze. That's important for the research that needs to be done, but also we need to find ways for this to become digestible to the masses and definitely to the market players. So this is the what you see on the screen is really the architecture, the blueprint of the data stack, which is this interoperable modular architecture. Different pieces have been built here and there. Maybe we'll talk about that with some of the SupTech solutions. But broadly, if we bring it all together, then we see a really game changer for, I think, for financial sector supervision and ecosystem development.
Thank you. Very detailed explanation, but I'm sure there are so many questions that we are already receiving. We will try to address them towards the end of this webcast. Simone, you mentioned about the quality of the data, and the quality of the data is essential. You mentioned also that the open data platforms today usually have very poor data. So I guess that's why you focus more on the role of the central banks and supervisors and the platform itself in order to elevate and improve the quality of this data. But there is a remaining question there that I would like to ask you about the quality of the data. One of the characteristics that make the data valuable, which means that market leaders probably would rather to keep the most valuable data for them and not to share it. Are you optimistic about the prospects of more fluent or more willing sharing from market leaders and incumbents, which is essential for the benefits of the society?
Look, it's a very good question, Salvador. My experience with some of this project is that some of the market leaders have received these projects very well. 3 years ago, we were in the Philippines, in Manila. We were working with the Central Bank of the Philippines on this idea of creating APIs between the central bank and financial institutions to be able to transfer the data for the compliance reports, where daily, weekly, monthly, all the compliance data through an API instead of through single templates. And we needed to find 2 banks to build and test this solution together. And we went to 2 banks, JP Morgan Chase and BPI. So one is a commercial bank, the other one is a retail bank. It's local, and they both were enthusiastic about this, because for them, it's compliance is a cost. For them, it's a concern. They keep them. They receive sanctions if they send data that are incorrect or delayed for the delays. And so they were very happy to build this API and to be able for the central banks seamlessly to receive data from them. I can pull out another slide maybe, which shows some of the advantages of that type of solution. So this is the API solution that we developed in the Philippines. To get rid of all the Excel files, and not only to get rid of the templates. So the reporting scheme, every time there is a new regulation, there is a new reporting, there is a new requirement for compliance data, there's a new reporting scheme. In this way, the reporting schemes were reduced from 29 to 1 but the granularity and the quality and the timeliness of the data were improved. So there was right now and the pilot went very well. So the prototype was approved, and now the Central Bank of the Philippines is scaling this solution to the financial, all the financial sector, including the rural banks. So they're really working to make this the data platform for financial sector for the Philippines. So in that case, it was very well received. Now we are talking about mandatory reporting. And that's one of the good things of having the central bank at the center of this infrastructure, is that the central bank is the authority to impose, to mandate some data to be reported. On the other side, there is where the vision goes, is that there is a tipping point where this infrastructure, because of the supply side and demand side data and all the data that are brought in, becomes so rich that it becomes convenient for the other players to bring in their data. So that's why it's important to look at the supply side, the demand side data, to understand better behaviors and to create a rich central, a rich data set, which combines, is not central, because one of the important things of the data stack is that it connects different data sets that are within different authorities. So for example, in Nigeria, we connected some of the census data with the data sets of the central bank, with the data sets of the payment processor. We brought in and digitalized new data. So there were very different resources. It's not one big, massive data set. It's more a network of data sets that come together. And at a certain point, I think there is a tipping point where the industry and other players will consider bringing in their data into the platform. So that's, I think that we will get to the point where even the market leader, we will see more value. And for some of the data that are already reported, they definitely see the value in the digitization of some of the current tools that they use for reporting.
Great, thank you, Simone. I think it's time to turn to the questions that we have received. There are a couple of questions regarding cybersecurity and privacy considerations in the context of this data stack and open data. Could you elaborate on that? How are all these elements of data privacy and cybersecurity addressed?
So all the solutions that we've been working on are using the best available tools for both making sure that cybercrime is limited, that the data is safe, and that privacy is protected. Now, we need to, as always, I think we need to understand what's the baseline. When I was working more on, I spent a lot of time in my life creating, contributing to the creation of the mobile money industry. And there was this debate about, yes, but now all these transactions are digital. And people often were forgetful of the risks of cash. In this case, the baseline is emails, Excel files. There are financial reports that are sent with Gmail today. So security right now, it's a huge, huge, huge concern. If we start to move into APIs, then we create encryption around the data. So I think from the cybersecurity point of view, there is actually an improvement with more digitization and more and really modernizing these platforms. The other thing is that the data are stored often in physical databases, so within the premises of the central banks. The opportunity, for example, to use the clouds, that's another thing that would actually improve security, I believe, and reduce the risk of data to be hacked. For the privacy consideration, I mean, we have plenty of tools right now that are available in order to hash data to make sure that a lot of these data need to be anonymous. I don't like almost all of them. What we need is to understand the macro. For all this type of intelligence and analysis, there is absolutely no need unless there is, for example, a case that is open for money laundering. No? So at that point, there is a necessity, of course, to understand who are the people. And in that case, there is an order from a court, from a judge, from the police. There are laws that keep that level of security. But otherwise, I think if we anonymize the data and if we use encryptions, we are going to increase the security compared to the baseline, which is now pretty poor protection of the data.
Thank you. There's another question related to this, but addressing specifically to cross-border issues. And how do you see that playing out in this context?
Cross-border issues, are we talking about cross-border remittances or data sharing between financial institutions? We can talk about both.
Yeah, I think that's my guess.
Yeah, the Bank for International Settlement has been insisting for a long time in their papers that we need more coordination between financial authorities and we need more sharing of data between between the supervisors. And I believe it's going to be even more important in the context of the pandemic to have data sharing. You know, if we like, the good thing about this, I hope we will take this. The good thing about this pandemic is that it's not hitting all countries at the same time. And the same thing will happen with economic and financial shocks. So there is an opportunity to learn, to understand what measures have been more impactful to resolve some of the economic and financial crises that are going to be generated in the next months. And so having good benchmarks for policymakers and for supervisors to be able to really understand what interventions are working or not, it's all about that international data sharing. Now, what we see is that some countries share more data. The wealthiest countries trust each other in terms of data sharing more in the way the data are kept, are secured, the quality of the data received, so there is more data sharing. And again, there is a divide that is being created between the richest countries and the rest of the world. So this work on SupTech in emerging countries, the work of the data stack, is to make sure that other countries are not left behind. And the important thing is to start working on common set of indicators and common set of visualization to be able to bring this data sharing and benchmarking into reality. So it's been something clearly coming as a recommendation from the Bank for International Settlement to put in place more and more tools for central banks from different countries to be able to share their intelligence. I believe that SupTech will critically improve the opportunities for data sharing across borders.
Thank you. There's an interesting question here and very practical. What are the first set of basic steps that financial authorities should take to work towards the data stack model that you are proposing?
Thank you so much for this question. I believe the starting point is the type of work that we did in the Philippines, and I know that Rwanda has done something similar with in a very different way. Austria has done similar work with the goal to have better supply side data and more timely supply side data. So they're working on the compliance reports to digitize them and to transfer. I've been saying this to donors and in several conferences. I believe that right now building APIs is like building the railroad. When the real economic expansion in the United States started centuries ago, it's the main, it's the highway for data, and it's a safe highway where data can run at a different speed, a different granularity, a different quantity of data can run between the financial authorities and the banks. So I think that's really the first step. What I see from financial authorities is that there is incredible interest in another solution. And if I can quickly, I will show also the map of that one. So this solution, and it's another solution that we developed together with the Bank for Internet, with the Central Bank of the Philippines. And it's a chatbot to be able to connect the central bank with the consumers and vice versa. So in this case, is to escalate complaints that are not resolved by the financial service providers, but it could be, we've been developing, we developed a proof of concept for the superintendents in Colombia, for example, where this was becoming a white label chatbot, where all complaints since the beginning were coming in. And the complaints management system as well, to really bring together all the complaints that the customers are raising to create a good set, like a good intelligence in terms of understanding the experience of customers. The Financial Consumer Protection Bureau is working on something very similar. So one side is the supply, but the other side is really the demand. So I think these two are the two starting point for all the SupTech work, for all the data stack and open data commons. When we start having good data from the supply side and from the demand, which allows us to understand the experience of the consumers, what type of problems they're facing. If all of this that really helps. And it's not just market conduct, because if we see all of a sudden a spike of complaints about one credit product, about one area where agents don't have liquidity, all these data together are really important also if we think in terms of resilience of the financial sector, data that could be brought in financial stability analysis. So it's critical. And then, I mean, if we have another minute, do we have another minute? The other thing is like the anti-money laundering issue. So right now, there are efforts to do anti-money laundering supervision, but the results are very dissatisfying. We saw the statistics about how much it's been every year, how much money is being laundered through the financial sector, and how little are the authorities able to recover. So if we want the economy, the real economy to be impacted, we need to make sure that in the real economy, the good players, the clean players can play without the criminals completely polluting the real economy. So money laundering, I think, it should be really a priority for the governments. And right now, money laundering is the work of AML supervisors it's very, very, very challenging with the current tools. So that's where I see the third, the most important use case coming. And in fact, money laundering supervision, anti-money laundering supervision, and the compliance reporting and information sharing are actually the three use cases that, together with the Saudi G20 presidency and the Bank for International Settlements and the Monetary Authority of Singapore, we selected to be the core of the global tech sprint that has just started. And I take this opportunity also, I don't know if there are tech startups or FinTech startups with us today, but take a look at this, and I will be happy to, you can see more information in my LinkedIn, in my Twitter, in the R2A website. about this competition. It's really an opportunity to compete and to participate in this global movement to create solutions that can serve central banks and also really go behind and have an impact in our economy, in our society.
Well, thank you very much, Simone. We have reached almost the top of the hour, and this has been a very interesting conversation, and I hope very informative for all of you. And some people have asked if you can share that presentation. I definitely we will, and I don't know.
I can publish my slides both in my LinkedIn and my Twitter, so they are public and everybody has access to them.
Excellent. Just before, I would like to take this opportunity to announce that we will have our next call, a webcast, and it's good that you mentioned the experience that you had in the Philippines. And on July 15th, we will have Banco Central do Brazil representatives Stanislao Simic and Joao Paulo Resende talking about the DIN, a chatbot tool to assist consumers to check their information from the credit registry. What are the challenges, what are the benefits, and future developments? That will take place.
I will definitely join.
Yes, great. That will definitely be an interesting conversation, more focused on the experience of chatbot from Central Bank do Brazil. And before I think we all leave the call, I would like please to ask Diana if you can put the poll for participants to give their opinions about this webcast. And you are more than welcome to join our next webcast in July 15th. Well, thank you very much all for your participation and your time and your questions. Some of the questions we didn't have a chance to respond them, but I'll send those questions to Simone. So he has your emails, and if Simone, you can get in contact with them answering the specific questions. There are some technical questions more specific to the technicalities of the data stack that you might be able to respond as well. Great.
Thank you so much for having me, Salvador. I see that some people are asking for my Twitter account is L as in leather, U as in unit, and then Di Castri, my surname. And you can also contact me on LinkedIn. I'll be able to share other to share other materials and to answer any other question. But thank you, Salvador, and thanks to the Toronto Center for inviting me.
Thank you. Until next time. Bye.